welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Srishti Sharma, and with me today is Snehi. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the stage to get all your stock-related queries answered by the experts. And you know that you can connect with us live on a WhatsApp number that will be flashing on your screen, as well as you can also write to us on our Twitter as well as Facebook pages, and we will try to take as many queries as possible because it's indeed quite a busy market in terms of the earnings that we are seeing back to back. And talking about the markets as of now, what a sheer rally that we are seeing on the benchmark indices. More than a century point gains coming in for Nifty 50. 21,643 is the level just a day before the important and the budget day. And look at the move in Bank Nifty. 640 points gain coming in for the banking index, and the broader markets are clearly cheering this rally. Dr. Reddy's was one of the result candidates. A strong US performance definitely got the health back in Dr. Reddy's. 4% gain coming in on this one. Tata Motors, being the most valuable auto company now in terms of the market cap, is up around 3%. Sun Pharma, Axis Bank and M&M are some of the other top gainers. On the flip side, L&T, a result candidate as well, is down about 5%, and no substantial recovery from the day's lowest point. In the Buy Now, Sell Now lens, we will tell you what are the factors ailing for L&T as of now, and what our brokerage is saying on this one. And other than that, Titan, Britannia, Tata Consumers are some of the other nifty losers for now. But that's all the market breadth is all about and the market picture. But Snehi, let's talk about L&T. No such significant recovery from the day's lowest point. What's happening?
Well, absolutely, Srishti. L&T is down 5% as we speak. Lackluster set of results coming in, and rather dull when it comes to their Q3 earnings. The management has sound concern over potential cost implications emerging from the Red Sea crisis as well. So let's go across to my colleague Lisa, who's standing by with a fine print of all those numbers and what's ailing the stock in today's trading session. So an overall miss on the revenue, but overall miss on the numbers, but does the revenue seem like a silver lining then, Lisa?
Right. So if you look at the earnings, the revenue was in line, but absolute EBITDA, the margin as well as PAT, it saw a miss compared to the estimates. Now, in the press conference, the management highlighted that the margin, the downfall in margin, the drop in margin was owing to the job mix as well as legacy projects. They did highlight Red Sea issues, and they see some cost implications arising owing to the logistic cost. But there was some silver lining because they are very confident about the outlook going forward. They said that they'll be ending the year with an order backlog of around 5 lakh crore. The order prospects stands at around 6.7 trillion, and mainly it will be led by hydrocarbon projects which they have been winning in the Middle East. And they are also confident of achieving a 20% growth guidance for the order inflow. And remember that they had given an earlier guidance of around 10 to 12% growth guidance for order inflow. So there has been an upgrade in the order guidance revision, and also they said that they'll be outperforming the revenue guidance in high teens from 12 to 15% guidance given earlier. However, the core infra margin, they are seeing some downgrade in the guidance, slight downgrade from 8.25% to 8.5%, and it has been revised downwards from the 8.5 to 9% which was given earlier. So these are the highlights from the con call and also the results from L&T.
Well, thank you so much, Lisa, for telling us the reasons why L&T is hammered in today's trading session and what our brokerage is calling out for L&T at this point in time. But let's also get the expert take for today, and we are being joined by two of our very special experts, Kunal Bothra on the technical side as well as G. Chokkalingam on the fundamental is joining us right now. A very good morning to both of you. And Mr. Chokkalingam, wanted to have your take on L&T because this particular large cap player is not doing well post the earnings, but given the size of the order book and the infra push for by the government for the whole of India, what's your take on L&T as of now? Do you believe that this is a good opportunity, or maybe some days ahead can offer a good opportunity for L&T for a long-term play?
Yes, this L&T stock, it's down almost 10% from the recent peak. But however, from the bottom, in 52-week bottom, it has already given 50% return, has beaten the Sensex and Nifty by big margin. Therefore, I would say that yes, for long term, it's a good buy, but one can buy in phases on any possible decline starting from today. Because of India's growth story, everybody, even this morning we saw most global institutions are now upgrading India's GDP growth, and that would be positive for a capital expenditure related company like L&T. So therefore, it's a good long-term bet, no doubt. But I would say that one can buy in 2-3 phases.
Alright, thanks for that take, Mr. Chokalingam. Kunal, let me come to you and let's talk about technicals when it comes to L&T. The stock has seen quite the run up in the last 52 weeks, approximately 70% higher. So where do you see the stock going from here? Is today's hiccup temporary, or do you see the stock ailing for a few days ahead as well?
Good morning. It looks like this could be a temporary weakness for L&T. The stock has been doing exceptionally well. The indicators were slightly overbought, so the stock needed some sort of a correction as such for itself because of the overbought nature of indicators. My sense is that the stock has this tendency of coming towards the 50 DMA and the 100-day moving average before it completes a strong wave of correction and then manages to consolidate for a few weeks and then starts off or kickstarts a new trend for itself. So it's a classical buy on dips for L&T. I think at current levels, traders could look at maybe initiating a first set of buy in terms of 3400 levels, which is the 50-day moving average for L&T, and the 100 DMA is at 3200 levels. So in case if the stock over the next 1 or 2 weeks provides another round of a 200 odd point correction, that could be a very good entry point yet again for L&T.
Okay, so that's the fundamental as well as technical take on L&T. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. As we come right back, it's time to take all your stock-related queries. So stay tuned and start writing to us. Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries, and viewers, you can connect with us live on a WhatsApp number that will be flashing on the top of the screen. So let's get started for today, and as you know, today we have Mr. Chokalingam as well as Kunal to answer and help you better. The first query that I have is for you, Kunal. This one is from Shankar from Chennai. And firstly, he's conveying his thanks for your call on PNB because he has actually bought 1,000 shares at a price of 65 rupees. So indeed, he's at a great profits in this one. But what's the target price as of now on PNB and what's the outlook?
Thank you so much for that. First of all, very bullish on PNB. My targets over the medium term, so I would look at another 6 months of time frame is closer to 165.
All right, let's move on with the queries. And Mr. Chokalingam, this query is coming in for you from Murli from Bangalore, and he has a query on 2 stocks. His first query is that he's holding 250 shares of Craftsman Automation at a purchase price of 5,120 rupees. His doubt is if he should average this out or should he continue to hold it. And his second query is on Chalet Hotels and your view on that.
Yeah, you can sell Chalet Hotel and buy Taj GVK. Which is a joint venture of Indian Hotel, and it is the cheapest hotel stock. As far as Craftsman is concerned, there is a little setback in the performance, but definitely for a long term, it's a buy, and one can definitely add if he has already bought at a higher price.
All right, Mr. Chokalingam, one more query for you. This one is from Pradeep. He wants a long-term view on 2 of the counters. First name is Max Healthcare. He has bought 30 shares at a price of 443 rupees, sitting at a profits in this one. And he also has 100 shares of Bhansali Polymers. I'm not sure whether you track this one or not, but he has bought these shares at a price of 76 rupees. He's a long-term investor, wish to stay invested for the next 1 to 2 years. What will be your advice?
Yeah, Bhansali Engineering is engaged in styro-based derivatives, and only problem is it is very sensitive to the oil price movements. And now oil price from the bottom has gone up by 20%. So these styrene-based companies get impacted very badly through inventory adjustment. Therefore, either December or Jan-March results, there can be a setback. So hence, I would suggest sell on Bhansali Engineering. And the other stock, just can you repeat, please? Max Healthcare. I have studied it. It's a great company. It's a diversified business models. I like it a lot. But I firmly believe that all are in price. The stock has gone up substantially, and the valuation comfort is not there. Maybe if the stock corrects at least 10%, then one can buy Max Healthcare.
All right, Kunal, let me come to you. This query is coming to you from Tina, who's from Pune, and she's asking that she has NMDC shares at a price of 175 and NMDC Steel at a price of 57. So she's asking if she should exit or she should continue holding both of these stocks.
NMDC Steel is something which I will not be able to recommend for long-term play because of the recent history for the stock. But I'm extremely bullish on NMDC. I think I've mentioned this time and again that my targets for this year for NMDC is closer to 280, and on the longer term side, in case we are long-term investor, the targets could be significantly higher to even 350 to 400 plus with time frame of 18 months to 24 months and higher than that. So I would suggest to hold if you're a medium to long-term investor with a time frame of at least 12 months and more.
All right, Kunal, one more query for you. This one is from Ashok B from Chennai, and he has a F&O query where he has bought HDFC Bank March futures, but his buying price is 1656 rupees. Can he hold this because it's a March expiry futures? Other than that, can he go ahead and average out at this point in time as well?
See, I would not suggest to average out the stock. In fact, if you're looking to offset the losses which you've incurred into HDFC Bank futures, then I think a better strategy would be to try and add maybe another private sector banking name, which is a more performing entity over here. ICICI Bank is something which you can consider buying. So in case if the stock comes back towards 1,020-25 mark, that could be a good starting point for you to look to buy the stock. Even Bank of Baroda about 240 levels, if that crosses about 240 mark, then I think on the spot levels, you can consider buying this stock as well and expecting a strong breakout. So you can try and offset the losses of 8-10% which you've incurred on HDFC Bank into either of these two names.
All right, Mr. Chokkalingam, let me come back to you. And this query is coming from Parthasarathy from Chennai. Now, he's holding 300 shares of UPL at a price of 650 rupees per share, and he's been holding these for the last 9 months. So his query is, should he hold, average or exit? What's your view?
I would suggest exit because I'm not comfortable with the balance sheet size, extremely leveraged. And also world over, the agri-based companies, though the food index inflation is rising, most of them are not doing that great. So therefore, I would give a sell call on UPL.
All right, that's a sell call on UPL. But Kunal, the next query is on AB Capital, wherein Jyoti Gai has bought 1,000 shares at a price of 182 rupees. Where do you see, by when do you see 200 touching for AB Capital? I'm not sure at what price the stock is trading at now. And it's an investment call that she is looking forward to in this stock.
See, I'm exceptionally bullish on the stock, and I think I've been mentioning this over the last 2 years. When the stock was, I think, at 120 or 115 rupees, that I look out for targets in the range of 250 to 300 plus for AB Capital for anyone who's invested or with a time frame of 2 years and more for the stock. It's come back towards, I think the recent high was around 195, then straight 5 consecutive months of downtrend for AB Capital, and it's now come back towards 170, 175 mark. So I believe that the repair process has started for the stock. The sooner the stock breaks past about this 180 levels, I would believe 200 could then just be a matter of time, maybe another couple of months, the moment the stock breaks past about 180 levels. So I think the benchmark which you have to keep should be closer to 180 as a breakout, and post that, maybe the next 1 or 2 months post that, we could be looking at 200 as a target for AB Capital.
Alright, there was one more query for you, and this is coming in from Hitesh, and he's asking that he's holding SW Solar at a price of 272 rupees. Now he wants to hold it for the long term, but what's your view on the company? Should he continue holding this?
See, it's a very high beta name. The only concern with stocks and charts like SW Solar is the high degree of volatility. The stock in August 2023 was almost at 420 rupees. In a matter of just 1 or 2 months, the stock had fallen down to 240, 250 mark. So a sharp degree of volatility, is something which I would believe, should not be, considered as, should rather be a major consideration for investors. And I think if you're already holding on to the stock and looking at good profits currently, I would suggest to book out profits and wait out for such phase of sharp volatility where the stock corrects by 15-20% as a good opportunity to buy back again. So I would suggest to book profits over here and wait out for a correction. Maybe closer to 480 could be a good zone where you will look to buy back again.
All right, Mr. Chokkalingam, the next query is from V. Ravichandran, and this one is on Vedant Fashion, wherein V. Ravichandran has bought the shares at a price of 1100 rupees. What he's highlighting is that the Q3 numbers were not as per market expectations, but other than that, in the past 1 month, the stock is down 22%. What's your take on Vedant Fashion? Can he continue holding this for the long term?
He can hold only for trying to get back his principal, but otherwise the valuation comfort is not there at all. These business models are suffering, from demand slowdown and also realization issue, both in the domestic and global markets. So if he doesn't have hard to book losses, maybe he can hold for long term till he gets back his principal.
Alright, Kunal, here's a query for you. This is coming in from Mr. Subramanian from Navi Mumbai, and he's asking if now is a good time to buy Titan. He already holds 27 shares of Titan at 3,835 rupees. So he's asking if now would be a good time to add to the stock. And he's also asking about your outlook on Trident. So 2 stocks and 2 queries for you.
So Titan, you can consider buying the stock at current levels, but I think it's just about in touching distance of its 50-day moving average. 36.45, if I'm not wrong, is the spot levels, and the stock made a low of 36.76 approximately, which means we are very close to the 200 DMA for the 50-day moving average for Titan. That could be a good starting point for you when if you consider buying or averaging out the stock, and keep on repeating this process whenever the stock, after a phase of a decent rally, comes back and retests its 50-day moving average as a good averaging opportunity. Trident, on the other hand, I think is a classical breakout, a high beta stock. But then when I look at the setup over the last 1 month from 36-37 rupees to 51-52 and then coming back towards a corrective phase, I think all the ingredients are indicative of a major breakout which could happen pretty soon for the stock. Just that it's a very high beta name, so you may be, you should be ready with a possibility of higher degree of volatility for Trident. But I think it's it's an excellent chart and you should continue to hold on.
All right. The next query that I have, Mr. Chokalingam, is on one of the recent listing, that is Muthoot Microfinance, wherein a viewer named Sibi Thomas from Trichy is holding 2,000 shares and her buying price is 232 rupees, sitting at a profits in this one. But what's the outlook in the short to medium term? Can he continue holding this counter?
I think you should book profit if it moves up even 5%, because the entire microfinance industry is getting crowded and the competition is growing day by day, including unlisted space. Therefore, you should view it as a short-term investment and book profit if it goes up even 5%.
Alright, Kunal, coming to you with the next query. Now, this is from Mr. N. Chandrasekharan from Chennai, and he has 2 stocks that he is doubtful about. He holds 1,000 shares of Thomas Cook and is in 30% profit currently. So, should he continue holding this for the next 1 year? What's your target going ahead? And his other query is on MTAR Tech, and he's holding 50 shares of the company. So, he's also asking for your 1-year target on this stock as well.
So, Thomas Cook, I would suggest to at least book 50% profits over here, because the stock at 170 plus levels seems to be coming back into an overbought territory. So the only concern with the chart is the indicators in terms of the short-term time frame, which means a cool off of at least 10% to 15% from the recent swing highs is what you can expect for Thomas Cook. So it's a good time to book out at least 50% profits and then wait out for this corrective wave to play out to try and buy back again at lower levels. MTAR Tech, on the other hand, I think is strongly going through a bottom formation process. Over the last 2-3 months, the stock has made triple divergence on the chart. So maybe over the next 1 month, we could probably be at a point where the stock may form a major bottom. So I would suggest to hold on, possibly wait out for another 1 month and then look to buy the stock at lower levels.
All right, so that's the day coming in on MTAR Tech. But viewers, ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on 5th of every month. So join ET Now and ET Now Swadesh and Sundaram Mutual to learn how you can build your financial future with a SIP in mutual funds. But for this, viewers, it's also a time to slip into a very short break. Don't go anywhere. We'll be right back in order to take more of your stock-related queries, so stay tuned.
Hello, and welcome back to Buy Now, Sell Now on ET Now, a show where we take you through all the viewers' queries and we get them answered by our experts. And let's continue with your queries then. And Kunal, this query is coming in from you by Mr. Kurian, and he's from Cochin, and he's holding about 100 shares of Ion Exchange at 560 rupees per share, and he's been holding it for a time frame of more than 2 years now. So he's asking, what should his strategy be going ahead? Should he continue to hold or should he exit?
So as of now, you can continue to hold on, but the concern with the chart is because of the recent listing, recent history over the last 2 years approximately, the stock for the first time is coming closer to its 200-day moving average. So I think the 200 DMA for the stock is at 497. Stock current price is also around 497, 498 for the stock. So it's the first retest of the long-term averages. Now, in case over the next 1 week, say over the next fortnight, if the stock is unable to sustain above this 200 moving average, and say by a margin of 5%, if it falls below a 5% margin below the 200 DMA, which is say closer to 470, 475, that could be an indication that maybe the trends for the stock is getting a lot more weak. So I would suggest wait out for another couple of weeks for Ion Exchange. Keep a stop loss of 475. In case of the stock trades below 475 in the next couple of weeks, that could be a time where we look to exit.
All right. The next query that I have, Mr. Chokalingam, is on Cochin Shipyard, the stock which is seeing no stopping. And Srinath is already holding 500 shares at a price of 860 rupees. Good time to book out profits, or should he continue to hold on?
Certainly, yes. Unfortunately, in every such bull run in the small cap and PSUs, this is what happens. They don't stop and keep rallying. But if you look back 40 years of history, invariably they corrected. The overvaluation in small cap never sustained on a long-term basis. So definitely it's a good sell at current price.
All right, Mr. Chokalingam, thanks for that, Kunal. Let me come back to you. And this query is coming in all the way from Qatar. And this is Mr. Najib, who's writing to us from Qatar. And he's saying that he has gained a whole of 150% in his holdings in IRFC and RVNL. Both of these stocks have seen quite the run-up last year. He's holding 10,000 shares of each. So his query is, should he continue to hold it until after the election season, or should he exit now?
So I think my only sense is that both these stocks have now gone into way overbought territories on their charts. Now, overbought does not necessarily mean that these stocks would go into a rapid kind of a correction. Many a times we've seen overbought nature of indicators can also be offsetted by a major time-wise consolidation. So possibility is for the next 3 months at least, these stocks can hang around to their current level, say by a margin of 5% to 10% broadly from current level. So I think if you're okay with holding on to the stock another 3% with no major expectations in terms of price movement, only then you should continue to hold on. If not, then I think maybe another 4-5% rally from current level. Say currently, for example, IRFC is at 171. If in case it comes towards 180, 185 mark, that's a zone where you may consider booking out profits and then look to buy back on sharp phases of correction, or at least the stock coming back to the lower end of this trading range.
Right, one more query for you, Kunal. This one is from Shri Padmavati. I guess she is writing to us for the first time, where she has bought 550 shares of Persistent Systems and her buying price is 7,800 rupees. Should she continue to hold on or sell at this point in time, and any short-term targets to look forward?
So you can continue to hold on if you're a long-term investor, but my sense is that many of these mid-cap IT names could actually go into a phase of underperformance with respect to large-cap IT. So if possible, and if you, depending on the mix of your portfolio and the construct of the IT stocks within your portfolio, if there is a scope, then I think it makes a lot of sense to shift towards large cap IT names. You can consider buying Infosys, Tech Mahindra, Wipro or TCS in that order if you are okay with adding on to few large cap names from the IT pack.
All right, Mr. Chokalingam, coming to you now, and this query we are getting from Mr. Anand from Chennai. He's writing to us saying that he's a long-term investor and he's asking for your view on Havells as well as Pidilite, and he's asking if right now is a good time to enter into both of these stocks.
Pidilite, yes, for long term, it always rewarded investors. Growth rate, though correct, it always it maintains some growth momentum. So considering my negative view on small cap and mid cap space, this is a good stock to hold. Sorry, second stock.
It was Havells, sir. The second one was Havells.
Yeah. Yes, I looked at the valuation. I am not comfortable at the valuation multiple of Havells India.
All right, Kunal, the next query is on Union Bank. Balaji from Chennai has bought 100 shares at a price of 86 rupees. Any short to medium term targets to look forward to?
Very bullish on these PSU banking lot, and I think over the last many quarters, I've been mentioning that I would expect these stocks to get into a big breakout. So PNB, for example, I'd highlighted a target closer to 160 plus, which means for Union Bank also, if we do a very simple kind of a price expectations, we could be looking at a target range, say closer to 180 to 195 odd levels for Union Bank. So maintain the bullish stance on the stock as well.
All right, and Mr. Chokalingam, next query is from Karishma from Delhi, and she's writing to us saying that she's holding 1,000 shares of IEX at 160 rupees since the last 1 year. What's your view on this? Should she continue to hold or should she exit?
Yes, because the market structure has changed a lot. It used to be a monopoly. Now the BSE joint venture has taken off, and NSE also, I believe, it started. And this is going to be a tough environment for IEX. So on any further rise by 10% also, one can use that to sell.
All right. The next query that I have is coming on Hind Copper, and Kunal Prathmesh has bought 200 shares and his buying price is 180 rupees. Is this a good time to book out profits, or maybe for the next 3 months or so, he can continue holding this name?
I think you should only do one change, which is increase your time horizon from expectations of 3 months to at least 3 years or more for many of these stocks, because Hind Copper has come back towards a 10-year breakout, I think a 7 or 8-year breakout, breaking past about the 2014 or 15 highs or levels for itself. So that generally is a strong indication that we could be looking at at least another 2 to 3 years of strong uptrend for the stock price. So I would suggest keep it for at least 3 years and let the stock play out the entire trend on the upside.
All right, Mr. Chokalingam, coming back to you, this query we are getting from Nishi, who's from Bangalore, and she is asking that she holds 40 shares of Hero Honda and she bought it at 2,662 whereabouts. So she's asking, will the move in Hero Honda look like Bajaj Auto, and what's your strategy going ahead for Hero Honda?
I believe it is better than Bajaj Auto because of lower exposure to external markets, whereas the domestic market continues to do reasonably well. Therefore, it's hold on Hero Honda.
One of the queries that is coming for you, Kunal, is from one of your fans named Rajiv. He has bought 1,000 shares of BEL and his buying price is 190 rupees. Should he continue holding this or exit?
I think it's a bit of a steep price which you've entered for BEL. Now, unless you are looking to add further quantity, in case if the stock dips down to say 170, 173 mark, which is currently the 50-day moving average, maybe it can move up higher by a couple of percentage points as now the stock spends some time at current levels. So if you're okay with holding on to the stock and then averaging out at lower levels, only then it makes sense to hold on to the current quantity which you have for BEL.
All right, Kunal, one more question coming in for you, and this we are getting from Mr. Vivek, and he says that he's holding NBCC at since the price of 90 rupees. So should he continue to hold, or now would be a good time to book profits over here?
Well, I would suggest to hold on to the stock even at current levels, but only tweak what you have to ideally do is now change your time horizon from an expectation of the next 3 months or 6 months to at least another couple of years, because NBCC on the short-term time frame has come back into an overbought nature in terms of indicators, but the chunk of volumes which have happened in the last 1 month indicates that the stock is getting ready for a much bigger breakout on the monthly as well as on the quarterly chart. So short-term wise, you may probably get into a phase of correction from 130-35 to maybe even a point where the stock comes closer to 110, 105 odd mark. But then if you can ride out that phase of volatility and hold on to it for another 1 to 2 years and more, I would believe that the upside potential could be significantly higher for NBCC.
All right. Mr. Chokalingam, the next query is from Imtiaz, and he was actually looking to make a fresh investment in Vedant Fashion, in which you already said that you're not very comfortable in discount at this point, but he also wants a take on Gravita India. Do you like this stock for a fresh investment?
Certainly not. This is a converter of used metals into usable metal. And it's a pure commodity play. And most of these traders, trading companies, normally trade in a poor single digit. But this is a massive bull run, mother of all bull run in the small cap we are facing. And therefore, this company's valuation multiple has gone up like anything. I firmly believe that it's a good opportunity to sell and, realize your real wealth in the equity, which is very difficult in the small cap space.
All right then, Kunal, coming back to you, two stock queries coming in from Mr. Alok from Delhi, and his first question is on Zomato. Now he has 10,000 shares of Zomato that he bought at 129 rupees. So now he's asking if should he continue to hold or is it time to exit the stock? And his second query is on J Kumar Infra. His average price is 586 rupees, and his query is the same on this stock as well. Should he continue to hold or would it now be a good time to make an exit?
See, be ready for some degree of volatility into these names because it's possible that these stocks may get into a phase of correction, maybe one more round of a sudden volatile knee-jerk price action for themselves and then get into a smoother uptrend. But then, when I look at the charts over the span of the last 6 months, 1 year, 2 years for these stocks, and they've gone through a major chunk, the major part of the negativity in terms of the trend is behind them. So they could be susceptible to maybe short-term phases of correction, but then possibly in the next 6 months, 1 year, 2 years, these stocks should be headed significantly higher from where they are currently placed. So it all depends on what your degree of time frame, your risk appetite is. If you're okay with holding on to the stock for another 1 to 2 years and okay to absorb minor degree of volatility in J Kumar Infra as well as Zomato, I would believe that could be a very good strategy if you can.
All right, Mr. Chokalingam, the next query is on McLeod Russell. This query is from Ghosh Tada from Delhi, and he's holding 20,000 shares of McLeod Russell, and his buying price is 25 rupees. He's at a profit at this one, but what's the outlook? Should he continue holding this name? Any hopes on some good gains in this stock?
I'm sorry, in the recent months I have not studied it, so it would be unfair on my part to make any research review on this particular stock.
All right. Since it's been tracked closely on the fundamental basis, so let's skip this query for now. We'll try to take this query from another expert maybe tomorrow. But Mr. Chokalingam, what's your advice on Aarti Industries then? This query is from Anjana from Kolkata, where she has invested in 200 shares and her buying price is 801 rupees. At this point in time, any advice to average this particular stock or can she stay invested? What's your outlook?
To sell Aarti Industry. It's a great management, good company, done extremely well in the past, but the industry headwinds in the business in which it operates are very tough. So I would give a sell call on this stock.
All right, with that, it's time to slip into a very short breather on this edition of Buy Now, Sell Now. But viewers, do stay tuned because we will be right back with all your queries and a query rapid fire as well. So stay tuned to the show.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries. And Mr. Chokalingam, the next query that I have is coming from Dasaradi from Vijayawada, and he wants an advice on two stocks where he can go and make a fresh investment or not. He wants a suggestion. Lokesh Machines as well as PCBL. I'm not sure whether you track these counters or not, but any advice for a fresh investment here?
Lokesh Machine I have not tracked, but definitely PCBL I have tracked it. Which makes a carbon black primarily for the tire industry. But the stock also doubled, but you can still hold at least for short term. There is a possibility of some upside as tire industry is doing very well.
All right, Mr. Chokalingam, the next query I have is coming in from Mrs. Asha Nayak, and she's from Bangalore, and she's asking if it's okay to buy Deepak Nitrite at the current levels. What's your view on this stock?
Definitely, it's a sell now. Entire, the chemical space, including these chemicals in which it is operating, they are under tremendous pressure worldwide. So I would give a sell call.
All right, Mr. Chokalingam, the next query that I have is coming in on Adani Enterprise. Atul from Dubai is holding 50 shares at a price of 1,907 rupees. Is that a hold or sell at this point? He wishes to stay invested for the next 5 to 6 years.
Yeah, 5 to 6 years he may hold on Adani Enterprises because of clearance from various quarters and also promoters bringing a lot more money. So short-term investors or even long-term investors who can take a 5-10% risk, they can continue to hold on.
All right, Mr. Chokalingam, thanks so much today for taking the time out and joining with us on the show and for answering all the queries of the viewers. Thanks so much for joining us. With that, viewers, it's a wrap on this edition of Buy Now, Sell Now. But you don't stop writing to us. Keep writing, keep sending us your queries, and we'll take it on the show tomorrow. Thanks so much for watching.